Arvind Bothra, pharma analyst at Religare, is now with us on the show. Arvind, thanks very much for joining in, and what a good day to have you when all of those pharma stocks are up and about. We'll start off with an Aurobindo Pharma. That counter is clearly on a tear. What is it that you're seeing in terms of the fundamental prospects on this one, and how much more upside?
So I think from fundamental perspective, there's still some upside because Aurobindo would still be trading at discount to the mid-cap peers. I think what has happened for Aurobindo is a spate of few positive things happening simultaneously. On the US side, they've started to get niche approvals in the injectable space, in the controlled release space, etc. Second, their execution has improved significantly. So they've gained market share on products like Cymbalta and the recent launches in close to double digits, and that could move the needle for them. So all in all, this would lead to sharp improvement in margins and profitability for the company. Second thing that is positive for Aurobindo is that they've been consistently reducing their debt levels, which is a very positive signal to the markets. Every quarter they are repaying close to 1.5 to 2 billion rupees of debt, and that has improved the company's visibility on cash flows. So that has led to the sharp re-rating of the stock of late.
What about, we'll talk about earning expectations as well, but what about Ranbaxy, which has been, well, probably a surprise mover because we have had stronger names like Biocon, Oro, etc. move. Ranbaxy's come out of nowhere and the last, 2 weeks has made a stunning move. What is it? Is it Daiwan or is it something else that is moving the needle out here?
See, in my view, from fundamental perspective, the product launches, whether it is Daiwan or it is Wellsite or the upcoming Nexium launch, all these three are very important triggers for Ranbaxy. And if you look at it in terms of earnings trajectory, if these three products come through, the earnings could look at significantly higher level than what they are doing of late. So that could explain part of the up move. There could also be other investor related expectations on corporate action, which of course has little to do with the fundamentals, but clearly should these three important product approvals come through, you would get some more comfort on the earnings.
Arvind, it's clearly the US market that is going to drive earnings for some of the large cap names like a Lupin, Reddy's and Sun Pharma. So run us through the earnings expectations, particularly when it comes to the US revenues for these three counters.
So for 3Q, you would be looking at a very strong quarter for Dr. Reddy's and Sun particularly, and both of them would be driven by US market. For Sun, fortunately, even the domestic market is doing very well. Lupin, on the other hand, would have a stable revenue growth merely because some of the recent launches that they've had have been in the latter part of the quarter. But having said that, for Sun and Dr. Reddy's, there have been a lot of new product launches in the last 2 quarters that have built momentum. For Sun, their semi-exclusive status in Doxil and doxycycline continues, and the Taro revenue run rate continues to inch up despite competition threat in nystatin triamcinolone. So that puts the company in a very strong path. I'm looking at 45 to 50% earnings growth in Sun, and that is consecutively been driven for the last 3-4 quarters now. For Dr. Reddy's, you would look at 30% plus EBITDA growth and 25% earnings growth coming out of the recent launches like Vidaza, Dacogen, etc., where Dr. Reddy's have started to build momentum. Going forward, you would see them gaining market share in Depakote, ER and Toprol XL, where Wockhardt would be vacating the market because of their own FDA issues. So Reddy's could be the beneficiary there. Lupin, I think, would have much stronger quarters in the coming times, driven by their recent approvals like Cymbalta, Trezevir and Trilipix.
Arvind, very quickly, I'm running out of time. Is there a joker in the pack? Some pharma stock which could have a higher risk, but the returns could be exponential if something works out for the company?
I think higher risk and high return at this stage could spring out of Glenmark over medium to long term. But the key joker over here would be reduction in debt levels. The valuations are clearly very comfortable now. But if debt levels start reducing at a faster pace, you would see a very rapid upgrade cycle.
Really good having you. Thanks so much, and I hope to see more of you during the earnings season as well. Post some key numbers. Thanks for taking the time out and joining us. That's Arvind Bothra of Religare speaking about some pharma stocks. Glenmark, a high risk, high return idea.